to Options Tender. It is Thursday, 10/14/21. Welcome everybody. If you are new here, go down to that bottom right hand corner, hit that Options Tender logo, and subscribe. We have quite a little bit to go through, but we're just going to go through SPX VX, the futures, and SPY for the free video, and then we'll move on to the Patreons. If you want to be a part of the Patreons, it's $5 for the first tier. Also, if you just want to have some good camaraderie, talk to different traders, we are in a Discord. It's called The Options Guy. All this is in the description, you guys. It's down below, so check it out. Here we go. SPX on the daily. Trend is our friend. We're looking at a possible ABC down after this ending diagonal breakdown into a W. And the reason why I say W is because this is a three-wave move down and then into X. So I think we're into the X move right here. WXY. That's a three-wave move, and we have now gotten over this high here, so that confirms that this could end anytime. It could end here right at the 50 MA. We could gap above it. We could do something like this over here, where tomorrow maybe we have some sort of pause or reversal candle at that point. We'll have to see what happens tomorrow, but we are well above the 8 MA and the 20 MA. We after a gap up, that was a gap and go, big move. So we were hedged for that, but now we added on some in-out spread puts because I don't know how far this is going to go. Technically, it could go a little bit further. We'll check it out on the lower time frame so we can see what's happening there. But notice that this rise, I adjusted this rising pivot. So I really dug in to see if this would fit this spot here, and it fits the scenario. So I think that's why it was so strong, and I do apologize when I don't get something right. So this rising pivot is where we actually bounced off from. There's touches all the way down to that wave 4 here, the wave 1, the wave 3. So you see how the dashed line, it's thick. You had a little pop above there, but it just as long as it has the touches, there's a touch here and here. So it's really valid that this would be the spot that we started such a strong move to the upside. So now what happens next if you have a W, an X, and a Y? I know that's way down here. Doesn't have to be. This is a very complex correction. We could have a three-wave move to the downside at this point. I'll go over with the Patreons the extensions. We're just about to hit the bell here. About a minute and 30 left. We haven't even hit the 23.6 retracement, you guys. So for all those bulls out there, I'm telling you, don't get trapped, okay? I know there's a lot of bulls that want all-time highs from this point, and unless I am completely wrong with this being the third of the primary wave, then the intermediate of the fifth primary, then you know what? Then we have to reevaluate everything. But we'll look at the corrective moves in the 65-minute chart. Okay, so looking at the MACD, we had our crossover. Histogram's turning green. That's a good sign for the bulls. So I do suspect from the MACD that we have a little bit more room to go to test this zero line. So I do suspect that we do rise a little further. That's why I did the in-out spreads for the puts, because I didn't want to time a reversal. It's very difficult to actually time those reversals. Even if we get a pullback, we will be successful in those in-out spreads as well. So they're high probability trades. You can check out one of my videos. I'll link it at the end. And on the RSI, we finally got above that 50 mark. Now, all that says is in a near-term bearish trend, there is the bell. So in the bearish trend, our ceiling is probably going to be around that 60 range, between the 60 and 70 at tops. But on the daily, I suspect it'll be around the 60. So we still have some room to go on that. We'll see what happens after tomorrow. See what the new candle brings. So let's go down to the 65-minute. 65-minute, we use the 65-minute candles to so we get even candles throughout the trading day. So we had a possible 5 move wave down, 5 down, 3 up, 5 down. That would be a zigzag. Okay, so that's a 3 wave move, and now we have our W. Let me move out just a little bit. Okay, so that would make our W. Then we had a 3 wave move up. We thought we could have been complete right there. We weren't. We had a nice move down, but just struggled to actually follow through there. So we knew something was wrong, and we definitely attached those lines there. So I built a channel here in order to contain this move that we had. So we had 3 wave move up for a W, 3 wave move down for an X, and a possible, this is, maybe a 3 wave move in there is really tight in there. It looks like a 5 wave move up. So maybe what's happening now is that for this X move after the X, for this Y move, maybe we have a 5, a 3 wave move down, and then a 5 to complete a zigzag for the end of X. And then we start our next move down, which would be our W, X, Y, to end the actual lower Y that's down, way down here. I don't know if we'll get down there, but so that's our scenario. This is very, very complicated. I got ripped apart at this point. It was bad. We hedge everything, but hedging doesn't mean that you're winning. It just means that you're not losing as much. So we have some nice hedges there, but now we're going to use a lot more of the spreads because we're starting to see what's happening. I built a channel around, since we had a divergent low here, and I don't think the actual move is over, then I do think this is the channel bottom. We just happen to put that along with the top there. So maybe that's our final move. We get that move tomorrow to reverse off of this channel top there. Could continue on to, a little bit higher for this lower degree channel here for a bear flag. But so that's possible, and then we just erase this channel, this bigger channel here. The divergent lows, we'd still keep that down there, and we'd see, how this plays out a little bit better. But yeah, so moving parts, lots of moving parts, and nobody's gonna predict exactly how these complicated, complex corrections are gonna happen, because when you have WXY moves, this is the new Elliott wave theory, and every single wave can be different. It can be a 3 wave, 5 wave, 3 wave. It's constructed of so many different patterns. So what we're looking at right here, while we're on this page, I did take a 60. I took it from the top, a retracement from the top to the bottom of this move, from the top of A to the bottom of C, and a 618 retracement just happened to. This would be a good objective short if you want to try. Not necessarily today. I mean, we missed it by a little bit, so let's see how we open up tomorrow. But that would be an objective short here for the and we're just at the 50-day moving average. Remember that. So this would be the 618 retracement. It just happens to coincide with the top of the gap. So gaps, when you go to fill a gap, that creates resistance. So that would be resistance along with the 618. And we'll see what happens. What kind of pullback? If we do get a pullback, then let's see if this pullback is an actual move to the downside, or if this is the pullback for the new zigzag. This X to Y move would be a 3-way move down and a 5-way move up for a zigzag, if it was to be so. From the X to Y, this move could be 5, 3, 5. Okay, so we have to keep that in mind. We have to stay objective in all of this. So complicated. And if anybody's saying that they're just ripping it apart, they're just, maybe you're a day trader and you can handle these moves, But if you're a swing trader, this is so freaking tough. Okay, so on the MACD, we do have slight divergence. It's not confirmed yet because we did not cross over on the MACD. We are still headed to the upside, so we could easily make a higher high in this one. But I just wanted to put the line there just in case we did actually curl down and start our descent to the downside. Then that would be a confirmed bearish divergence. And here the RSI doesn't say the same thing, but we are into the overbought territory, which when you're in a bear type trend, or at least bearish trend in the short run, the 70 mark on the RSI should be a good sign that you're making a reversal. Now, when you're in a bullish trend and you're getting out of channels and you're heading to the upside, you can get to the 70, you can be overbought to the 80, 90 spot. You can oscillate inside the 80, 70 area, all of this area for a while you're still traveling to the upside. But in a bearish trend, the channel is headed down. You're lower high, lower high, lower low, lower high, lower low, lower high, and then possibly a lower low. We're in a downtrend right now. So this right here, overbought, is probably a good signal that we're going to reverse soon. And that could be a gap up tomorrow and crap. That could be just getting to the 618, the gap, filling that in or not filling it in. If it doesn't fill the gap in, then that's a bearish scenario as well. So okay, a lot of information there. I just want to explain myself because that's what happens. There's all these confluence. There's all these real what should I say? Just real big details. These, or I should say, little details that we have to look at that that get us where we need to be. So you always have to be thinking, there's one trader we follow on Twitter, always think like a criminal. See how you can hurt the most people in this market. If you see a bunch of people that are bearish, how can you get them out of it and then make your move down? So we have on the VIX, moving over the VIX futures, we broke well underneath this 20 mark, and also our wedge here broke underneath there. Our last support, I do suspect we'll get to that support, is at the 17 mark, which we'd still have a higher high at that point. So if you check this out, three-way move up, higher high, higher low, higher high, and looking for a higher low from this point, possibly. And we can put a little trend line there. Maybe we just make this move to that point here. So, which would be in confluence with the 17 range. So, we'll be looking at that in the VIX. Let's go ahead and put an alert here just in case. It could happen overnight. The VIX has just been dumping. It's just been horrid. We'll go 17 on that. Okay. So we're not oversold yet on that point, but we'll be looking for this confluence right here. Okay. Last but not least, let's go to the SPY on the daily. Daily trend is our friend. And just check out all these moves, even this big move here. Look at how low the volume is as opposed to all of these moves in this area. These moves were huge. When you have a retracement, you have no volume. Volume fades off. Same thing here. All this is some sort of consolidation. We thought we might get the reason why that's highlighted over there is because we thought that might be an island gap. We ended up just opening up and just moving down, but just no volume to confirm this move here. So that just kind of goes in the bear field where we could reverse anytime now. We have the 50 MA, and over the 50 MA, all we have left is just resistance, maybe here at the 448 area or the 618 retracement that we were talking about. We can get rid of all these alerts. And then after our move up, our corrective move up, 1, 2, 3 wave, then we'll be looking for much bigger move down similar to this. So we'll probably put some sort of extension onto this form to see from the bottom, from the top here, extension down to the low, and then from wherever this reverses, and see where our 100% retracement is, or extension, excuse me, and see where that goes. But ultimately we're looking for this 382. We don't have to. Once we get underneath this pivot and this support, if we do, then the 200-day may stop us. It may just give us a bounce, and then we'll be looking for that 382. Okay, so that's it for the free video. You guys, thanks for joining us here. Options Center. Like the video if this information helps. If you want to join a Patreon, then check out patreon.com, www.patreon.com/optionstender, and subscribe. All right, have a good day. Patrons, stick around.